Now here's Manjit Singh, CPA, and Kusum Ramachandran with more tax advice for you.
Good morning, ladies and gentlemen. This is Manjit Singh, CPA from Falls Church, Virginia, with offices in Ashburn, Falls Church, and Manassas. Ladies and gentlemen, in the past couple of years, as the real estate market crashed, there were a lot of people who did loan modifications and walked away from their primary residence or rental properties, and there was a debt forgiveness by the mortgage companies. Today, Kusum is going to talk to us about the tax implication of those debt forgiveness. Kusum, good morning.
Good morning. Good morning, viewers. A lot of clients come to us with Form 1099-C. The C stands for cancellation of debt. And when the bank has advanced you, let's say $100, $200, $300, maybe $1 million to buy a house, and then you foreclose on it or have a short sale, you let the property go. Obviously, since 2007, with the mortgage meltdown, the lender really can't come after you. What they have recourse to is only the property that secured the debt. A lot of times it's not worth the amount that they advanced you. So in order to write that off, they are required to issue Form 1099-C. And it's always very aggravating for a taxpayer to receive that because by the rule, of course, is that any debt that's forgiven to you is income to you. So a lot of taxpayers are afraid now that they will have to pay taxes on that huge sum of money, the debt that was forgiven. Well, the government has made it a little easy for the taxpayers because of everything that happened. They surely will not be, these taxpayers are in enough trouble as it is, having lost their homes, to top it all, if they also have to pay taxes on that amount, I don't think they would get anywhere. So from tax year 2007 through, I believe, 2013, there's the mortgage debt forgiveness that is available to taxpayers, provided certain qualifications are met. First, it's only available for your principal residence. Second, it's only available for amounts that were used to buy, build, or improve your principal residence. In other words, if you took an equity loan and you used the money to buy a car, then you can't have that forgiven because you have the car and the bank gave you the money for the house, but now you took equity out and you bought a car. Obviously, that's not going to be forgiven. You have to pay taxes on any amounts that you did not use to buy, build, or improve your principal residence. In order to qualify for the forgiveness, you have to fill out Form 982. And all you do is that you indicate that it was your principal residence, that you had, when you sign off on your tax return, of course, you're acknowledging that you didn't use the money for any purpose other than to buy, build, or improve your primary home. If you have debt, mortgage debt on let's say a rental property, and that's forgiven, you don't have the same option available to you. In that case, the amount is taxable income. How you deal with that is that you see what you purchased the property for. Then you see the amount of debt that was forgiven. Then you see what the fair market value of the property was that you gave up. And most of the times, the two turn out to be a wash. In other words, if you owed $100,000 and you gave up a property that was worth $100,000, then the two will wash out. Every once in a while, people do refinance their investment properties, and now the money that they took out from the investment property and used for other purposes, obviously that kind of debt is not going to be forgiven. It has to be reported as income on line 21 of your Form 1040, and you will be subject to taxes on that amount. Would you want to add something to that, Mr. Singh?
Oh, certainly. Thank you, Kusum, for giving back the mic to me. I would like to have the last word, of course, and there's another element there also. The credit card debt that you are forgiven, most of the time that is subject to income taxes, unless you can prove to the government that you were either in bankruptcy or insolvent. And there are specific codes to talk about that. Kusum, one quick question. The fair market value that you just talked about, where do you find that information?
That is actually on your 1099-C. There's a box for it which indicates what the fair market value of the property that was given up was, so that it would mean really that the bank did get that much. A lot of times though, the banks don't manage to sell the properties for what they indicate as the fair market value, but in good faith, that's what they think they could get for the property, so they do indicate that on the form.
What to do if you haven't received in the 1 year of the debt forgiveness, and a couple of years later is when you receive the 1099-C? I think a more appropriate word is subsequent year.
I'm sorry, what was your question? I couldn't quite figure out. If you received on one loan in 1 year and the other in the other year?
In the second year, let's say that.
You would probably have, it depends. Again, if it was your principal residence, you would still be able to fill out another form 982 and write that off. But if it was your rental property and if you already claimed your loss in the year before and netted that out, then you would have taxable income in the subsequent year.
Anyway, folks, at this time, I believe we've taken enough of your time today. We'll let you absorb this information, especially for those who are trying to do their own tax returns. Till next week, this is Manjit.
And I'm Kusum. Thank you for viewing.